The more essential you become to a system, the faster the system moves to destroy you, not as punishment, as self-preservation. The most dangerous position in any economy is not weakness, it is irreplaceability. That is the trap, and it runs on schedule every single time. New York Harbor, April 1913. The casket is draped in black cloth. Flags across Wall Street fly at half-mast. Church bells ring. Thousands line the streets in silence. Inside the casket, John Pierpont Morgan, dead at 75, the most powerful banker in American history. 2 weeks earlier, he died in Rome. A hotel room, he fell violently ill. Days of rapid decline. The official story was natural causes, but the timing became the story. 9 months after his death, Congress passes a law to ensure no single individual could ever again hold what he had held. What brought him here? This is money memory. The past is still running. Private power does not disappear when it becomes dangerous. It gets institutionalized. When one actor grows more capable than the state itself, the state does not destroy him. It builds a machine to absorb his function. This is the indispensability trap. History builds it every time. 1861. New York. America is expanding faster than any government can manage. Railroads cutting across every state, steel mills, power plants, factories multiplying. Capitalism at its most uncontrolled. No central authority, no regulations, no floor. Morgan enters his father's banking firm at 24, trained in London and Geneva, fluent in the language of capital. He does not build companies. He takes collapsing ones and imposes order. Failing railroads, restructured debt, incompetent executives removed, competing lines merged, discipline forced into every balance sheet. They call it Morganization. Wall Street had another name for him, the Fixer. By the 1890s, he controls thousands of miles of railroad track. He funds Edison, wires entire cities, creates General Electric. In 1901, he buys Carnegie Steel for $480 million, merges it with competitors, creates United States Steel, the first billion-dollar corporation, larger than most national economies on Earth. Morgan wasn't just financing American industry, he was creating it. This is the first mechanism, the power vacuum. October 1907. 2 speculators attempt to corner the copper market. They borrow heavily. Prices do not rise. The bet collapses. Banks connected to the scheme come under suspicion. One of them was Knickerbocker Trust. Depositors rush to withdraw. Doors close. Panic spreads across every major city. The U.S. Treasury has no plan. Congress is paralyzed. The United States had no mechanism to flood liquidity into collapsing markets. Everyone turned to Morgan. He is 70 years old, heavy, immovable, a man whose silence alone has made executives resign. He summons every bank president to his private library on Madison Avenue. Ornate ceilings, marble floors, portraits watching from every wall. He locks the door, literally. The key turns. The room falls silent. No one leaves until they agree to his rescue plan. Morgan assigns capital contributions to each institution. No discussion. Numbers dictated. He commands loans directly to the New York Stock Exchange. The panic stops within days. And that success scared Washington more than the panic ever had. This is the second mechanism, the indispensability trap. When a system relies on a single actor, and that reliance becomes publicly visible, the actor's success reveals exactly how fragile the system is. The more indispensable he becomes, the faster the institution forms to replace him. This pattern was not unique to 1907. Britain, 1694. Private financiers repeatedly rescued the English crown from insolvency. The result? The Bank of England. The state refused to remain permanently dependent on private credit. France, 1800. Financial chaos under the Directory elevated private bankers to dangerous influence. Napoleon founded the Banque de France. Centralization became structurally unavoidable. Same mechanism, different century, identical outcome. By 1907, the U.S. federal government collected less than $700 million in annual revenue. Morgan's network of banks and trust companies commanded liquidity that far exceeded that figure. One private individual, more deployable capital than the national treasury. The system did not reward him for this. It registered a threat. A man powerful enough to halt a panic is powerful enough to trigger one. Washington understood this during the rescue, not after it. But here's the problem. The solution the system reached for was not accountability. It was replacement. By 1908, Senate hearings on the concentration of financial power had begun. By November 1910, Senator Nelson Aldrich convened a secret meeting at Jekyll Island, a private retreat off the coast of Georgia. Morgan's own protégés attended. Their assignment: design a central bank. By 1912, the draft legislation was complete. December 23, 1913. The Federal Reserve Act is signed into law, a permanent institution, empowered to inject liquidity into markets without asking any single individual, without a library, without a locked door. Morgan died on March 31, 1913. Grand Hotel, Rome. His estate? Approximately $80 million. John D. Rockefeller was worth nearly 10 times more. Morgan was not the richest man in America. He was simply the one the government had been unable to replace. Until December 1913. That's when the question stops being biographical and starts being structural. And if this sounds familiar, it should. September 2008. Lehman Brothers collapses. Markets freeze. Credit stops. The federal government does not know what to do. The Federal Reserve, the institution built specifically to prevent another Morgan moment, injects hundreds of billions of dollars into the financial system. Not a private banker with a locked door, a public institution with a mandate, but the same function, the same absence of alternatives. March 2020. A pandemic shuts down global markets. The Fed deploys over $3 trillion in a matter of months. No public vote. No delay. The mechanism is identical. Only the names have changed. Private power replaced by institutional power. The indispensability trap simply changed its container. But what happens when the institution itself becomes indispensable? The Federal Reserve's balance sheet in 2007, $906 billion. By April 2022, nearly $9 trillion. A tenfold expansion in 15 years. Morgan was considered a threat because one man controlled too much. The machine built to replace him now controls more than he ever could. Your savings rate, your mortgage, your cost of borrowing, determined by a committee no one elected. Not abstract, not historical. The trap does not disappear when it institutionalizes. It scales. History has never seen it at this size. So what should you take away from this? 1. Power does not vanish when it becomes dangerous. It finds a new container. 2. The indispensability trap is structural. It forms wherever systems leave a vacuum. 3. Replacing private power with institutional power changes the name. Not the risk. The theme is constant. When one actor becomes more capable than the state builds a machine to replace them. The machine inherits the problem. One locked door in 1907. $9 trillion by 2022. That's not history. That's the architecture you live inside. Subscribe to Money Memory, because the patterns don't change, only the names do.